Welcome back to the channel. I hope you're having a great day. So there's a common saying in the charts or in trading that helps you understand what might happen in the future. And it goes, to get right, you need to look left. And basically what that means is that we need to look back in history to see what's happening in price. And today's video, we're going to look at something that happened in 2018 that was extremely vital to Bitcoin's price, and it's repeating itself today. And not only that, we have some other data points that we need to look at that also correlate with this theory that could set up for Bitcoin's price in the coming future. But before we do get started, I want to urge you guys to like and comment the video down below. Let me know what you think of this video, and let's get right into it. Now, the chart that I'm referencing, or the history that I'm referencing, is the very famous bull trap of 2018. This is the 2018 bear market of Bitcoin. This is when you could see it completely falling. And this is when it was famously hitting that resistance and everybody thought it could not drop below $6,000. And then once it finally coiled up and reached it, it fell through. What we're doing today is we're looking at the 2022 chart and we're getting the exact same look where we're getting a coil up in price and possibly another shot to the downside. So what I wanted to do for you guys is take a look at the Bitcoin chart. We're going to take a look at the 2018 scale right over here and look at that drop. And then we're going to compare it to the one that we currently have in 2022. And then later in the video, we're going to talk about some key points that could push this to be true and some other things that I think you really need to consider for the short and long-term future. Now, when we move in, this is the 2018 chart. Now you could see that obviously when Bitcoin was falling, we had a very massive bear market drop. Obviously, this is because it was during the 4-year cycles. Then we had a very long consolidation, basically spanning from the beginning of February all the way to the end of November. So almost 10 months right around there. And remember, if you remember investing or looking at Bitcoin's price at this time, it was floating at around $6,000. And for whatever reason, everybody said that it could not break below 6,000 because look at how strong this resistance is. Well, if you ever look at investing or trading or the charts in general, you'll realize if something seems too obvious, it's usually the opposite. A lot of this has to do with market makers, manipulation, and obviously just market sentiment. So obviously what we had happen is that once we had this $6,000 support put in, then what happened is that we had a 51% drop from right around this area. So if we take that same exact theory, take it from a 51% drop to where we are today, we might be able to find out where price might be going. So what we're looking at now is the 2022 price. And again, when we're looking at this, what we are seeing is a massive bear market drop, again, for different reasons from this time. But again, at the same time, you're still seeing that bear market come into play. So if we take this consolidation, again, what we've seen here, it has not been 10 months for this consolidation, maybe the overall bear market, but that consolidation in 2018 was around 9, 10 months. So what we're seeing is this is at the beginning of June. And so what we would need it to be at is right around that March, April timeframe, which could, push all the way into 2023. Now, that doesn't need to happen, but again, when we look at the data, this is a very possible scenario. So if we take a 51% drop from where we are right now, that would put us to a price of around $10,000, just a little bit below. Now, you might be thinking to yourself, there's absolutely no way that's going to happen. But when we zoom out to the weekly time frame, you can see that this also correlates with a very strong volume in the markets right around here, pre-pandemic levels. And when you look at the markets and what a lot of people are saying, they're saying that we need to get back to those pre-pandemic levels because the pandemic really did something to the markets that has never been seen before. A lot of that stimulus money, a lot of pumpage, a lot of overvaluations. And so a lot of people are saying we could get to those pre-pandemic levels, which again would be right around these areas. So that might come with confluence. Now, one other thing that we could see is possibly maybe we don't go that low. It is a possibility, right? Anything is a possibility at this point. But again, if we take the strongest resistance points from those pre-pandemic levels right around here, this could act as a future support level. So anywhere honestly below this level of around 17,000 to 12,000 could be a very realistic target range for Bitcoin's price. Now, realistically, when we're talking about Bitcoin, especially in today's market, because of how correlated it's been with risk assets and just what's happening in the world, especially in the United States, we need to look at the DXY. The DXY is the strength of the US dollar. And again, for the longest time, as long as the USD currency pair is doing well, Bitcoin is not. As you could see from right around here, as soon as the DXY started to gain strength from this bottom, that's when we hit our first local high for Bitcoin, right around $60,000. And since then, we have been falling. So this is definitely an inverse pair. And whenever we're looking at the DXY, even in the past, when the DXY is doing bad, you can see Bitcoin is rising. Again, DXY doing bad, Bitcoin rising. And the opposite is true. And one of the main factors that decides the DXY strength, again, is interest rates. And if we take a look at the interest rate chart, one of the important things that I want you guys to remember is that one, we kind of were at all-time lows back over here in the early, the pandemic era, 2020 to the early parts of 2022. The difference here from the past is that we've never raised rates as fast as we have any time in history. When you take a look back, they've kind of gradually bumped it up. They have been aggressive in the past, but for the third time in a row, they raised interest rates by 75 basis points, which again has never really been seen before. And they were pushing for 100 basis points. But that's the main thing that we're seeing right now. And the next FOMC meeting is November 2nd. And what they're saying is that we could see another 75 basis point rate hike because their target rate is right around here at 4.75 for the interest rate. And currently we're only at 3.25. So 150 basis points away from their target, or again, terminal rate. Now, this is important to remember because again, as interest rates go up, so does the DXY. And if the DXY goes up, then Bitcoin is an inverse pair and a risk asset, so it should go down, which actually correlates with this chart. Now, this is basically taking the last 4 bear markets from 2011, 2013, 2017, and then 2021. And we're looking at the drawdown percentage from the all-time high. Now, the one that you really need to pay attention to is the light blue. That is currently the 2021 bear market. And when we compare it to the others, it looks very, very similar. And it looks like we are kind of in the middle right here. Now, the different one is the 2011 bear market. The reason is because there wasn't that much liquidity. It was literally 2 years into Bitcoin's existence. So it kind of, the market drawdown of 93% and only lasting 159 days is kind of the anomaly or the outlier. But when we look at the 2 most recent bear markets, we're looking at days ranging in between 364 and 411 days, with an average drawdown of both 84%. So if the max drawdown continues to go even 10% more to the downside, again, that could reach us into that level of 17,000 and 12,000, or possibly even dropping all the way to that low of 10,000. But the one really big thing here that could correlate with this is that you have to look at the amount of days that we've been in this bear market compared to the others. We are still around 200 days from when those bear markets were done. And when you look at the economic status of what's happening in the world, I don't see a bull market happening anytime soon. So as we continue to go on, what we could see is another bear market that follows this basically to a T. The only difference is that these last 2 bear markets didn't go through a recession, but this one did. So things could look a little bit different. But again, if we're looking right around here at this time frame, this is when Bitcoin really dropped off the cliff, right? Breaking below that $6,000 support level. And so when we're looking at this and comparing it, maybe Bitcoin does something like 2017 and 2013. But again, one of the most important determining factors in all of this is the FOMC rate. Now, this is November 2nd, and this is what people are pricing in. Currently, we are at 3.25%, and most people, around 60% of the market, thinks that we're going to get another 75 basis point rate hike, which again would be the 4th one in a row, which is historic. And we've again never raised rates to that extent, but it could be happening here. And when we take a look out to June or next summer, people are thinking that we could get to, again, the target or terminal rate of around 4.75 to around 4.5%. That's where a majority of the market is pricing it in at. And again, nobody really knows what's going to happen in the future. Not even the Fed knows what's going to happen, because their main goal right now is this right here, and this is US inflation rate. The only time that the Fed is going to pivot is if inflation rate continues to go down. Why? Because that's their main concern as of right now. The one way you can take inflation down is by raising interest rates, making that debt a little bit more expensive and making it harder for you to spend your money, or for people to take out debts. And so as they raise interest rates, again, this is an inverse comparison. As interest rates go up, inflation in theory should go down. Now, if we take a little bit of a closer look, we can see that inflation is starting to go down a little bit. Maybe we have reached the peak, which again, we're at those 1981 highs. But until, at least a couple months in a row, the Fed starts to see inflation rate actually fall down, then maybe they'll start to lower the basis point rate hike, but they won't actually have a pivot in the markets, and the markets won't actually start doing well until they stop raising interest rates. That is the main concern right now. And as things are looking, it really doesn't matter what the last month or two say. It's really, the long term, what is inflation doing? As long as inflation goes down, then the Fed will pivot, lower their interest rate hikes, and then risk assets will then again pivot as long as interest rates do as well. But for the time being, as of right now, in the next couple of months, FOMC is going to be the strongest dictator in the markets. It's going to determine what the markets do, especially risk assets. If we continue to raise at the rate that we do, the fastest that we have in history, then we're going to see more volatility and more action in the markets. And again, as they raise those interest rates, we can see risk assets continue to fall in price. And the last FOMC meeting was actually one of the most volatile in history. So, as volatility continues to go up, we could see these markets fall even farther, which again correlates with Bitcoin dropping past that 19,000 support, just like we talked about. And like I said before, I don't really think things are going to get better in the short term, because you've got things like this happening where you literally have banks that are supposed to be understanding how monetary policy works, which I'm not saying I'm an expert on. I'm just an armchair economist. I'm just a guy on YouTube. I am so ignorant to what is actually happening behind the scenes and how all of this works. But one thing that you could look at is that if you have an inflation problem, one of the things you probably don't want to do is put more money into the market, and that's what Bank of England did. They're having an inflation crisis, and so what they do is they print another 65 billion pounds into existence, which again doesn't really help your problem. And as a result of that, we are seeing not only the Bank of England, but literally every other currency start to trend down. And the only currency or fiat currency that is doing well is the US dollar. Now, you would think that this is really good for the US dollar, but it's actually not good for the world, because as other currencies start to devalue themselves, what they'll do is that they'll start to come into the US dollar, which you think is good. But then you have the entire world depending on the US dollar, which is bad, because if you take a look at how the US dollar operates, it's inflationary, and it is no different than any of these fiat currencies. The only difference is that it is probably the strongest one. And so it's really just exacerbating the problem here, because down the road, as the US dollar starts to crumble and inflate itself out of existence, then the whole world is going to be impacted by it. But as of right now, we are just seeing these fiat currencies take a hit, and then in the future, the US dollar will do the same. And so one of the things that we could look at is, again, people always talk about alternatives. The government wants to make CBDCs. People aren't really for it. But again, when you take a look at just September, when everything has been falling, when all the fiat currencies, all the risk assets, even gold that's supposed to be an inflation hedge, continue to fall in the month of September and just in the long term, Bitcoin actually was positive in the month of September, taking a look at around a 0.83% increase in price. Now, you might not think that's a lot, but again, we are in a bear market. We're also in a bear market where everything else is falling off a cliff. So maybe this isn't, the 1,000% gains that you're used to, back in 2018 and 2013. But again, it is showing proof that Bitcoin is doing very well in these types of conditions. So that's everything that I have for this video. I hope you guys enjoyed it. I hope you found some value from it and learned something. I definitely do want to get your guys' feedback in the comments below. Let me know what you thought of this video and what you want to see in the future. And make sure to subscribe and like the video down below. I'd really appreciate all the support. Until the next video, I'll see you guys then. Peace.